Welcome to Forkast IQ. Excited to have you join us as the world accelerates into the digital economy. You give us 30 minutes and we're going to give you the world of Web3. Well, it's good to be back, still shaking off a little bit of jet lag from a very interesting week in the United Arab Emirates, having visited Dubai and Abu Dhabi. I'm Forkast's Editor-in-Chief Angie Lau. Are you ready? All right, here we go. It was a very interesting week for crypto, starting with a Twitter battle royale as an online war of words erupted between a former U.S. Securities and Exchange Commission attorney and Chief Technology Officer of Tether, the biggest stablecoin issuer in the world. The Twitter war began when John Reed Stark, former enforcement attorney of the SEC, said that Tether, the company behind the stablecoin USDT, as you might know, could be the next domino to fall. Yikes, the next domino to fall. Why? Well, a lack of regulation and audits of the world's biggest stablecoin by market cap. That's what he said. Tether's CTO, Paulo Arduano, did not let this slide, though. His tweet back: look at the company's reserves attestations for the first quarter of 2023. It showed that Tether's reserves stood at almost 82 billion US dollars at the end of the quarter, and that its excess reserves had reached an all-time high of over 2.4 billion. However, Stark questioned the validity of Tether's reserves report. And back to Tether again, Arduano reminded in a tweet that, hey, Tether did not operate in the US or solicit US customers. So this back and forth between the two men continued via multiple tweets over several days, and these tweets, well, they were quite interesting. In Stark's fourth and final response to Arduano on Sunday, he said he wished Arduano's promises about Tether's integrity were true, but, quote, there exists no way to verify his representations due to a lack of transparency. Now, on Wednesday, Tether also announced starting this month it will regularly buy Bitcoin for its stable coin reserves, using a portion of its profits as part of a new investment strategy. All right, from regulatory clampdown in the U.S. to crypto regulations in Korea, Forkast is following the story for you as South Korean lawmakers work on developing a regulatory framework for the crypto sector as the rest of the world engages, though not without a bit of drama. There was a bit of a power struggle behind the scenes. Forkast's Danny Park brings us all the details in this report from Seoul.
In 2021, over 5.5 million people in South Korea had invested in crypto assets. That's more than 10% of South Korea's total population of 52 million. This major crypto market was also home to Do Kwon's Terra Luna project, which crashed and blew away more than $40 billion in investor wealth last year. The country is now working on a regulatory landscape that can promote crypto innovation while keeping a check on bad actors. And South Korean lawmakers hope to achieve that through a two-part regulation. But behind the scenes, there was a power struggle. The Financial Services Commission, the country's top-level financial regulator, also known as the FSC, currently oversees the local cryptocurrency market and industry. However, the Bank of Korea, the country's central bank, demanded last month that it should also have the authority to request and access data at cryptocurrency platforms. Hwang Seok-jin, professor of information security at Seoul's Dongguk University, explained to Forkast why the bank made such request.
원래 원화하고 법정 화폐하고 1대1로 매칭이 돼서 스테이블한 이런 코인에 대해서 코인이 많이 발행된다든가 누나 테라라든가 이런 사태가 발생이 된다고 그러면 통화 정책에 상당히 영향을 미칠 소지가 상당히 많기 때문에 한국은행에서 이제 그런 부분을 요청을 하신 거고요.
Their squabble surfaced again at a National Assembly meeting on April 25th when the FSC, central bank representatives, and lawmakers met to discuss the crypto regulation bill. Due to the significant impact of the cryptocurrency market on the financial system, it is necessary to require cryptocurrency operators to submit documents to identify the impact on the conduct of monetary and credit policy, financial stability, and payment and settlement system, said Bank of Korea's Deputy Governor Lee Jong-yeol at the meeting. On the other hand, Kim So-young, the vice chairman for the FSC, argued that the Bank of Korea did not have that authority since tokens are not used for payments in the country. while ruling party member Yoon Han-hong said that giving central bank the authority to access crypto data may give a false impression of the country acknowledging crypto as an acceptable form of payment. At the end of the meeting, the FSC agreed to the central bank's request, giving it the right to request data and documents from crypto platforms when necessary. While South Korea's digital asset sector is welcoming regulatory clarity with open arms, power sharing between the two authorities have the industry concerned.
안 그래도 가상자산에 직접적으로 투자하는 이런 이용자나 투자자들 입장에서는 더욱더 투명하고 건전한 시장 질서를 확립하는 데 상당히 중요한 역할을 차지할 것이라고 보는 경향도 있고요. 그리고 가상자산 시장에서 사업자들은 아무래도 그 심판이라든가 감독자가 많아지면 아무래도 좀 약간 위축될 수밖에 없는.
Nevertheless, Hwang, who participated in the constitution of South Korea's new crypto bill, says it is well on its way to pass legislation in coming months and that it will set the groundwork for the healthy growth of the local crypto market and industry. In Seoul, South Korea, I'm Danny Park.
All right, thanks, Danny. Let's check in on crypto markets then for everyone, shall we? Bitcoin mining difficulty, which measures how hard a miner would have to work to verify transactions on a block, hit a new all-time high this week. Megha Chadha gives us this detail, and all the details, in fact, on all the market moves. Megha, what are you seeing?
Angie, crypto markets have been very quiet this week. The major macro cue that's on crypto traders' mind is the debt ceiling talks in the United States. And all signs are looking positive that we'd have a deal sooner rather than later. Bitcoin did try to go past the $27,500 level midweek, but it's certainly acting as a resistance for now. Overall, BTC was off 0.5% over the last 7 days. The mood for Ethereum is also quite subdued as the second largest crypto gained just 0.25% over the week and was circling that $1,800 level Friday morning in Asia. Lido staking protocol enabled ETH withdrawals this week, which led to Lido tokens soaring almost 30% by the week's end.
All right, thanks for that, Megha. All right, but what does this all mean? Well, let's get some intelligence for you right now. It's what we do at Forkast IQ, and take a deep dive on what's driving the market with Marcus Thielen, Head of Research and Strategy at Matrixport. Good to see you, Marcus. All right, so Bitcoin's been in the $25,000 to $30,000 range for a bit now, and we're really seeing some liquidity concerns as well. But is there any indication that we're going to be moving above and beyond this range anytime soon? I think that's what everybody really wants to know right now.
Yeah, I think the upside is still higher for Bitcoin, and I think the key driver here is, of course, the declining inflation. We're seeing the Nasdaq breaking out, and there has been traditionally a strong correlation between US tech stocks and Bitcoin itself. I think the ecosystem for crypto in general is relatively weak. We're seeing TVL, really fails to pick up. Transaction revenues, let's say on Ethereum, are quite low. They're only around $207 million per month, and at the peak it was $1.8 billion, so materially lower.
Okay, got to ask you about Tether here. Tether announced it would be buying nearly $222 million worth of Bitcoin for its stablecoin reserves. Do you think that, as the biggest stablecoin in the market right now, a move like that would move markets? But that hasn't really been the case. Why is that?
$200 million or $220 million is not really going to move the needle. Because Bitcoin really trades, something around $10 billion a day. On good days, it trades 20 or 30 billion. So 200 million doesn't really, move the needle. But I think it shows from the Tether side that they're really still supporting the ecosystem, still spreading money around.
All right, got it. Marcus, just one last question before we let you go. How do you see the markets performing in the short term after the otherwise quiet week for crypto?
Yeah, so there's basically a pattern which we have identified, that every month when the US announces their inflation data, which is usually around the 10th to the 12th of the month, we see actually a drop into this date, only then for the market to rally back towards the end of the month. So on the very short term, we were expecting this drop, and the drop was a little bit more extended because for the first time, Bitcoin didn't really rally so much after the inflation data was announced. Because we have broken the downside trend line over the that we have formed over the last 2 weeks. So I think the trend seems to be going up.
All right, Marcus, thank you for the IQ, and thanks so much for your time today for the audience. All right, it's time for a quick break, but we're going to check in on the NFT markets when we come back. Stay with us.
Forkast News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. We go to where the action is, from Asia to the world. Forkast is the most reliable source of intellectual discourse and insight that informs, educates, and bridges the gap between the blockchain industry and the mainstream. The future is being built, and Forkast has it covered. This is Forkast News.
All right, welcome back to Forkast IQ, where we are giving you some intelligence right now in the world of NFTs. We're seeing some big moves here. A Bored Ape, number 4980 to be precise, was sold for a whopping 530 ETH. Okay, we're doing calculations for you. That's almost $1 million US on Tuesday. All right, but this big sale has failed to lift the mood as NFT markets continue to grind lower. Mega joins us once again with a look at this week's performance. Mega?
Angie, overall sales are certainly slipping in the NFT markets, but it's the Bitcoin Ordinals that are standing out. 3 of the top 5 collectible sales for the week were from BRC tokens. Bitcoin NFTs are putting up quite the competition to the typical ETH NFTs. By Friday morning Asia, NFT trading volumes on Bitcoin almost matched those on the Ethereum chain. But the overall mood is certainly quite somber. The broader NFT 500 index that measures the performance of top 500 smart contracts looked flat for the week. However, NFT transactions on the Polygon chain dropped quite dramatically, and the impact could be seen on the Forkast Polygon index, which fell almost 7% for the week gone by.
All right, so what does this all mean? Thank you, Mega. Let's also get in Yehuda Petscher right now, Forkast Labs data analyst, to talk about the NFT market moves. All right, Yehuda, it's always good to chat with you. Now, okay, the launch of the BRC20 tokens and Ordinals NFTs on Bitcoin, we're also watching that. It's been a game changer, right? I mean, compared to Ethereum, which has been a popular platform for NFTs, why do you think having NFTs on the Bitcoin blockchain protocol holds greater value here?
So this is the first time it's been able to happen on the Bitcoin mainnet, and it's pretty darn significant because it's the first ever blockchain. And you're seeing so much activity and so much trading volume and sales volume because people really do value the OG blockchain, the very first one. And if you're going to have an NFT preserved somewhere, Ethereum's a great place, right? But wouldn't you rather have it on that first blockchain ever? One that stood the test of time, that has so much more money invested in it, truthfully. So many more people holding that token. It's an ecosystem that is ripe for NFT trading. It seems like it's growing every day. More volume, sales volume, trading volume. It's really just getting started, and that's my honest feeling about it. Is this is really the tip of the iceberg with what we'll see on Bitcoin. People talk about the flippening, where one day people think the Ethereum token can flip the price of Bitcoin. Well, we're seeing almost the opposite potentially happening on the NFT side, where people think that the NFT market on the Bitcoin blockchain can flip Ethereum and do more sales than Ethereum. And I think that's very possible. I think that could absolutely happen. Again, so now you had this latest development with these BRC20 tokens, which is playing off of, it's a copy of meme coins on Ethereum. So on Ethereum, we've seen the Pepe token, we've seen Turbo. There's an endless number of these meme coins. Well, now they exist on Bitcoin, and that was never a thing before that.
Talking about Pepe, the frogs, let's jump over to him right now. Is the hype over here?
It's just that Pepe is really the most significant character on the internet. He just is. He is just at the core of meme culture, of internet culture. He also has the right people behind him promoting him. Pepe is very different. You hear people talk about Pepe's potential, that it could become the top meme coin, period. It could be in the top 10 market caps for any cryptocurrency, and I think that's very, very likely. I do. A lot of crypto is all about, feelings, less technical things, and this one has all the feelings of something that could and likely will be rather massive.
All right, Yehuda, thank you for that intelligence download. And on that note, let's take a quick break. We're going to come back and focus on the latest regulatory developments in the United States on the other side. Stay with us.
Forkast News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. The future is being built, and Forkast has it covered. This is Forkast News.
All right, welcome back to Forkast IQ, where we curate the top stories in Web3 that is defining your future today. All right, this is a big story here. As they say in the UK, in London, mind the gap. Not going to do an accent for you, but mind the gap. We're talking about CBDCs here, central bank-backed digital currencies. Did you know the number of countries engaging in CBDC efforts have tripled since 2020? The US, well, it's not really one of them. Hong Kong, though, is taking its first step to launching e-HKD, the digital Hong Kong dollar. That, don't forget, is pegged to the US dollar. Forkast's Jeff Chung joins us with all the details.
Thanks, Angie. Well, Hong Kong's central bank has finally started trials of its very own central bank digital currency. Now, the digital Hong Kong dollar's pilot program launched yesterday, and 16 financial firms have been chosen to take part in the first round of trials. Now, they include names like Alipay, Ripple Labs, and MasterCard, but Hong Kong's 3 note issuing lenders, HSBC, Standard Chartered, and the Bank of China, will also take part in the trials. Now, these trials aim to take a closer look at any use cases not already explored by the Hong Kong Monetary Authority, as well as any other implementation and design issues. Now, the HKMA first mentioned the plan for a CBDC in June 2021 and released a position paper on the e-HKD in September last year. While there still isn't a set date on the official launch of the e-HKD, the HKMA will announce the results of this pilot program in a report this November. Back to you, Angie.
All right, from Hong Kong to Forkast IQ audience. Thanks for that, Jeff. All right, turning now to crypto and back to U.S. regulators. It is an evolving situation with what feels like layers of complexity added almost daily. The spate of lawsuits targeting cryptocurrency exchanges is raising fears of the U.S. legal system stifling innovation and trying to put an end to crypto development. But is that really true? We sent Forkast editor Will Fee on a policy dive into crypto legislation in the United States to find out just what's been going on in the world's largest economy and what lies ahead. It's important to see the contrast of what we're reporting from the rest of the world. Will?
2013. That's when legal but less than desirable industries like payday lenders found themselves on the US Justice Department's radar as Operation Choke Point kicked off. Using credit freezes and account closures, the Justice Department focused its guns on industries it felt were at high risk of fraud and money laundering. And now, following the collapse of a trio of crypto-friendly banks and a legal clampdown on some of the world's biggest cryptocurrency exchanges, there is a growing sense among crypto advocates that the industry is under similar attack from both financial regulators and lawmakers alike. American regulators have, for their part, so far denied any targeted attempt to cut crypto off from the banking system and discredit the sector, but as the lawsuits rack up, suspicions continue to mount. The current mood is a stark contrast to the beginning of last year. At that time, President Biden signaled that his administration would take a positive approach to crypto legislation in the interest of bolstering consumer safety, leading to a wave of positivity that spread across the industry. But just a few weeks later, Terra Luna imploded, wiping out an estimated $40 billion from the digital currency space and kicking off the crypto winter. Add in the FTX collapse in November later in the year, and it is understandable that US regulatory bodies such as the Securities and Exchange Commission, or SEC, and the Commodity Futures Trading Commission, or CFTC, might look to play a more active role in regulating the crypto space. But for many, that approach has been not only heavy-handed, but misguided, with different regulatory bodies targeting specific crypto enterprises, often with conflicting aims and definitions of what exactly they are regulating.
Well, you've always had in the United States a threshold issue on investor protection laws, and that is who does what. The SEC, which regulates a lot of retail investment and securities, and the CFTC, which regulates commodity derivatives and futures and the like. Who is responsible for what in the crypto ecosystem? Other countries do not have that dichotomy, which is like a gatekeeping mechanism on how regulation is rolled out and implemented.
Within that dichotomy, cryptocurrency exchanges continue to present a target for regulation, which is coming at them thick and fast from both sides. In February, the SEC told San Francisco-based exchange Kraken to halt its staking services on the grounds that this amounted to the unregistered sale of securities. The legislative body has also indicated its intention to sue the remote-first exchange Coinbase on similar securities violations. Ripple, another US-based exchange, reports it will likely spend an incredible $200 million in total legal fees over the course of its own courtroom wranglings with the SEC. Not to be outdone, CFTC has, for its part, filed charges against the world's largest crypto exchange, Binance, and its founder, Changpeng Zhao, better known as CZ, for what is said were numerous violations of the Commodity Exchange Act. For some, the debate has now become a political issue, with lawmakers on both sides of the aisle expressing both support and dismay for the regulator's heavy-handed approach to crypto.
Crypto has definitely become a political football. Senators like Elizabeth Warren and other politicals who are on that end of the political spectrum appear very confident that taking an anti-crypto stance is good politically. I think that does translate to some extent into policy.
Warren's proposal of the Digital Asset Anti-Money Laundering Act is one of the main drivers of the Biden administration's increasingly antagonistic approach to crypto, which could include the levy of a 30% tax on cryptocurrency mining proposed for the 2024 federal budget. Yet there are lawmakers within Biden's Democratic Party who are pushing for more flexibility.
There are productive voices on both sides of the aisle. Representatives Richie Torres and Ro Khanna are two examples of Democratic congressmen who have been very leaning forward on these issues. I think the FTX collapse and resulting broader economic problems, especially with the banks, have sapped any energy out of the Biden administration to work productively here, at least for the foreseeable future.
And that lack of energy could have negative effects for the US further down the line. The current stagnation means that the nation may lose the first mover advantage that saw it ascend to the top of the crypto pile as an early crypto adopter and developer, just as other regions, particularly in Europe and Asia, begin to really focus their attention on the opportunities inherent in the sector.
I think the US is the only developed economy that hasn't really come up with a framework that makes sense and that can allow the whole ecosystem to thrive. And at the same time, I think the whole ecosystem has become extremely frustrated, and they are now finally looking for alternatives outside of the US.
But despite the gathering clouds, there are potential silver linings to this situation and the potential to get the crypto ball rolling again. In early May, New York State Attorney General Letitia James announced the state's intention to take a nation-leading approach to crypto regulation, adopting a common-sense stance that aims to combat dysfunction in the sector. And focused regulatory oversight of that kind is welcomed by many within the industry.
We are in the early innings. It's difficult to say there should be no regulation when the market cap of crypto decreased by $2 trillion last year. I think regulation is going to lead to consumer confidence, which is ultimately going to be good for the industry. And what you're seeing in Washington right now is, there have been some unhelpful statements from regulators. I think that is evident. But, you have to put yourself in the shoes of regulators. They have a job to do as well. And hopefully over time, I'm confident that some of the back and forth between the agencies will be worked out, and we're going to end up with a good framework in America.
So, while there is hope that the current antagonism between regulators and crypto can be ironed out in time, one pressing question remains. Is greater crypto regulation really the answer to the sector's most pressing concerns? For Forkast, I'm Will Fee.
Wow, great roundup that gets us up to speed, and I hope you enjoyed that. Let me add some developments we're also seeing from MENA. The Middle East, North Africa region, MENA. It was really eye-opening. I think I mentioned at the top of the show that I just got back, and yes, waking up to what's happening there. To experience it firsthand, the thoughtful attitude from Dubai's Virtual Assets Regulatory Authority, or VARA. America's crypto policy chill is extending the crypto winter in the US, but from Dubai to Hong Kong, London even, and across Europe, attitudes are remarkably different. And that's a big signal for where the next stage of growth might be coming from in Web3. Having traveled across 3 continents in the past 3 months, I can tell you, we are bringing this IQ straight to you with our team around the world. All right, that's a wrap on this week's show. Thanks for tuning in. I'm Forkast's Editor-in-Chief and your host, Angie Lau. Forkast IQ, where you get intelligent in Web3. Thanks for joining us.